What's up? Good morning, guys. How we doing? Hope you're all having a good one here. So far, we are live and we are ready to rock. By the way, just a quick heads up. Regularly scheduled programming begins this coming week, or I guess we get back to regularly scheduled programming. But we're here and we're ready to rock, and volatility is not too bad. ATR on the 2-minute chart, this is the 2-minute chart you're currently looking at, is sitting at about, what are we at, maybe 15? Maybe about 14 here on the ATR. That's the average range of a 2-minute bar based on the last 20 minutes. So that's where we stand right now. We can certainly make that work. We have 47 seconds left here on this 2-minute bar. If we take a look at all the looks, top left is the 5-minute, top right is the 2-minute, and bottom of your screen there is the daily chart showing only the New York sessions. What do we have? Range market on the daily. Right now, if we look intraday, I would argue that with that initial attempt at a dump off after the open and then pump and now pullback, I would argue also a range intraday. So we have range, head down, and scalp. All right, good morning, guys. How we doing? Hope you're all having a good one here so far. We should take a look at this. 5-minute as well will roll over in about 60 seconds. There is the rollover of the 2-minute. Let me give this one more bar. Gaines, good morning. Look at that pullback, huh? Let's go. We got 1 minute and 30 seconds left here on the 2-minute chart. On the 5-minute, I would argue that's a little bit of an outsized bar on the 5-minute. So I'm going to continue to execute on the 2-minute here today. Again, top right of your screen, if you're just joining us, is the 2-minute. Top left is the 5. So we have 1 minute and 13 seconds until the rollover of the 2. Now again, range market, intraday, and on the daily. So what I'm thinking here is we have to look at all the available ranges. On the 5-minute chart, I would argue that this whole thing is really the range. However, you know that there's going to be some arguments here on this kind of look for this kind of thing, right? Kind of a bear channel, an aggressive bear channel. So we have to keep an eye on that if I were to get short on a low close out of this 2-minute bar. However, if we close near the low of this bar, to me, I think that's enough for me to sell the rollover. 35 seconds out, let's see if we get that. Or if the bulls end up bouncing this back higher. Bulls wicking it back higher, back into the little bear channel. 10 seconds out, man. I don't think the Bears are going to be able to do it. All right, there's the rollover. We'll give this one more bar. Now, again, this is relatively nuanced, right? I mean, if we were to see a bull bar right now closing on this 2-minute chart, like above the previous bar's wick high, then I have to buy for a push back up into the bear channel, right? But right now, I think the market's trying to determine, hey, are we going to hold this bear channel or are we more looking at the intraday channel? Right now, I think that's kind of the call. We need more information. Joe, good morning with Trading Chris. How we doing? All right, 60 seconds. All right, 20 seconds out here. Low of that previous wick. We're looking at about 908 3/4-ish. Yeah, we're going to get an inside close here. Inside of the previous wick's outskirts. I'm sorry, the previous bar's outskirts, high and low. So we got to give this one more bar here. I think market's still trying to decide. I mean, this 2-minute gives us a really good look. I mean, you go back. Here's the whole range, right? But bear channel. And you know that the bulls are going to be looking at this low, this descending point of support. And the bear is therefore for covering shorts, which adds buying pressure. So got to be careful here. We are 1 minute and 25 out here from the rollover of this bar. Let's see if we get something. Galanow, good morning. How we doing? I suppose good late afternoon for you. All right, 20 seconds here. Watch the 2-minute chart top right of your screen. Let's see if we get a nice clean close near the high of this bull bar. If we do, I will have to buy that. And there we go. I will get long. I will set my protective stop order on the curl. You're looking for just a bit of a push back up into this little bear channel toward the high end. Beauty. 8 3/4 points. We'll pull that off for 800 and some change. Let's move on. Good scalp, Joe. Hey, Troutman, how we doing? Hope you're doing well, brother. Yeah, that was a great little setup for a scalp. Now this push here is heading toward the high end. 50 seconds out here. I'm curious to see if this overtakes this wick high here. If it does, I need more information. Because this is a pretty strong, this is the strongest bull push that we have seen since shortly after the open. And there we are, testing that little wick high. If we overtake that, I can't really short that rollover. Even now, forming a flat top. We got 12 seconds till this bar rolls over. Let's see if it rolls over and pops up through there a little bit. And I want a little bit more information here. This is kind of close. You guys see that? See that pop through? I gotta give it one more bar. One more bar. If we get a nice clean bull bar closing near the high, then all of a sudden it's like, all right, is this a, I don't know, maybe kind of an aggressive bull flag that's actually succeeding the breakout. However, in this market, you guys know I prefer to bet against breakouts because most of these breakouts are not going to go very far. Most of them. Gotta be very careful trading breakouts in a range market. All right, so 37 seconds out from the close here of this 2-minute bar. Let's see if we can get a nice clean close near the low. If so, you know I gotta sell the rollover here from again on the 2-minute chart and see if we can maybe take out some stops down here. Again, that curl has not been there long, but there's got to be a few. Maybe good for a 3 to 5 point push past there, and I would have my take profit set. So let's see here. We got 10 seconds. Let's see if the bears have any kind of backbone to give us a close near the low. Come on, bears. Not even a little bit. See that pullback close right at the previous bar is a wick. Not even a little bit. All right, same idea here on this bar. We've got 1 minute and 8 seconds left. And we got this wick low that we need to take out. If we can take it out and close near the low of this bar, below that wick low, I gotta sell the rollover. Same stop hunting mentality. Still within this little widening out wedge. See if the bears can get it going. All right, 15 seconds. Ready just in case. And nothing inside close. Joe! Nico, you'd be proud of me. I removed both EMAs on my 2-minute chart. Only have VWAP on that one. There you go. The cleaner, the better. This is the arc for everybody. This is how it always works. You start trading, you open your brokerage platform for the first time, and there's nothing on it. And you start with a clean chart. And then over the next 6 to 18 months, everyone loads up their charts with a bunch of bullshit that doesn't mean anything and is lagging and isn't helpful because it isn't watched heavily enough and it's not popular, so it means nothing. The only indicators that actually mean anything are things that are very real, like if you want to call volume an indicator, very real. Down here, this is range, right? It's volatility, very real. This here, you'd say, yeah, well, it's the 20 exponential moving average. That's real. Okay, sure, but when you start applying nuance to the indicators, there's too many options now. So this is a 2-minute chart. It's a 20 EMA. The only reason it would ever mean anything is if people are watching it and making decisions based on it. And the 2-minute chart is a little too niche for it to mean a lot. Now the 5-minute, same EMA, the 20 EMA here on the 5-minute, that's a very popular EMA on an extremely, arguably the most popular intraday time frame. And that can act as a self-fulfilling prophecy sometimes. So I keep an eye on it. But on the 2-minute, I'm with you, Joe. I'm about ready to just pull it. But again, keeps me feeling like I kind of know where we're at least. All right, looks like another inside close here on the 2-minute. A little bit of a move higher later on, but late in the bar, still not enough. I mean, right now, really, there's just too many options for this thing, right? You could be looking at kind of a weird, bizarre, aggressive wedge. We could still be looking at this. This just snaps and we look at this. There's too many options, so we got to clean it up. And see which wick this move ends up kind of overtaking here. Higher, lower, clean, sloppy, whatever it may be. Yeah, you know, listen, a bunch of indicators, it can look really cool, it can look awesome, it makes it look like you know what you're doing. But to anyone who actually does know what they're doing, I think it's a telltale sign that you're lost. If you have, I would say any more than like, depends what you're trading. On small cap momentum, since there are so many self-fulfilling prophecies, I would say any more than like 3 or 4 lines on your chart, and you know, there's way too much. On futures, it's way less. I'd say any more than 1, maybe 2. Just because it's a lot more efficiently priced and there are less self-fulfilling prophecies because everyone kind of focuses on the same thing. Whereas again, like small cap momentum, most people are trading a 1-minute chart and most people are using a 920 EMA and a volume weighted average price. But here, if you want to throw a VWAP up, great. I think it's great. It's definitely watched heavily. Or if you're on a popular time frame, if you want to throw up a 10 EMA, a 20 EMA, both very common. 50 EMA, very common. I mean, listen, if you're trading futures, guys, you're probably going to end up trading some form of price action because if you understand the context of the market, it works, okay? It's the source of all the indicators. Just go straight to the fucking source. Skip all the rest. Just go to the price action, understand the market context, look at the daily charts, say, okay, are breakouts likely to go a long ways? Are they likely to go 750 points? Look at the daily chart. Of course not. Of course not. This is a complete, utter range market, just brutal range market, right? Intraday, say, okay, are we also in a range market? Yep, there's the 5-minute. Range market, I would say, things probably aren't going to go that far. Okay, let's put our head down and scalp. And then you look for price action setups and you understand the context. So your targets and risk management is within reason based on the market context. Range. Right now, which can change. Just do that. I'm telling you guys, if you're trading futures, just do a variation of that. You can trade a 15-minute, you can trade a daily chart, you can trade a 15-second chart if you're psychotic. Have fun. I don't care. But just get rid of all the bullshit indicators. Save yourself 3 years. They don't work. They don't work. No one watches them. Believe me, I'm not just talking out of my ass. I tried to make, for example, EMAs work on big products. Big products. I tried very hard on like big blue chip stocks. This is years ago. Big blue chip stocks, for example, and ETFs, which is kind of the same thing here. It's just the indices in general. To make scalping around EMAs, a whole bunch of EMAs, simple moving averages, exponential moving averages, different variations of them, different time frames. I tracked all the data. I could not cover the commissions because it's a coin flip, because no one watches it, because it doesn't work. Right? Trade price action. It's what's actually happening. It's the true relationship between buyers and sellers at this very moment, and then keep the price action setups you take contextual to the market we are in. What the hell does that mean? Range market or trend market. That's what works. Okay, and then manage your risk, make the best decisions you can, manage your emotions. That's just what it is. That you're likely to come to that conclusion, at least trading futures, at some point in the future, so you should probably just accept it right now. Again, there's a million ways to trade price action, but this is the niche you want to be in, is price action, at least on futures, and really most things. Unless you're like trading some weird, like, news-driven, like biotech sector or something. All right, here we are. This is a flat top. I'm watching this little flat top here to see. Yeah, we closed pretty much right at the flat top. Let's give this one more bar and see. If we get a nice hard push, I'll have to get long on the rollover. Brandon, how do you determine a range market versus a trend market given the time frame you were trading? You look at it. You look at it. Here, look at the daily New York sessions, bottom of your screen. Who's been making money? Limit order traders, probably limit order scalpers. Directional traders haven't been making a lot. Stop entry traders have not been making a lot. Limit order, meaning like more like reversion scalping, has been making a lot. Stop entry is more like continuation. Look at all this overlap. Continuation hasn't been making a whole lot of money, probably, right? On average. So you look at that, you say, well, okay, shit, are these breakouts likely to go 750 points? Damn, probably not. I mean, the whole range of the last 2 weeks is, I mean, what, 550? I mean, geez, 500 points. So no, of course it's not likely. So should I bet on big, giant breakouts, even if it's just 150 points succeeding? Probably not. Probably not, because other people are going to look at that breakout and say, I don't know, man, this hasn't been working. I'm going to take profit. Boom, selling pressure. I'm going to short. Boom, selling pressure. I'm going to stop buying. Boom, lack of buying pressure. And then it flips it, or turns into a trading range and then flips it, right? It's just logical. Just gotta do what makes sense. Yeah, you know, Chris, I mean, 2 weeks, man. If it took you 2 weeks, next time it'll take you, 5 days. Then after that, it might take you 2 or 3 days. After that, it might take you, 3 or 4 trades. Gotta adjust. Gotta adjust. When continuation, you guys remember, we were doing pretty well on continuation back a few months ago. Like, just straight up continuation on the 2-minute. You look at the 2-minute charts lately, that style of trading, people are like, hey, like, why'd you adjust? Because it wouldn't work well right now. And I just started streaming, a few months ago, so you didn't see me trading this way on stream because the market at that time called for continuation. Now it calls for more scalping. Whether it's small little continuation or limit order reversion scalping in ranges. Buy low, sell high kind of mentality, right? But if I had sat here and kept trading the same continuation setups, we would not be doing so hot right now, would we? So you gotta adjust. That's just market context. It sounds scary, it sounds intimidating, it's not that big of a deal. It's not that big of a deal. Just look and say, who's making money? Who's making money? Who has the easier life right now? Stop order, bulls and bears, entries, right? Continuation entries. Or limit, range scalp, buy low, sell high mentality. People going for big, huge targets or people taking smaller scalps? Who has the easier life right now? You make that adjustment. I mean, and then listen, a lot of times, the trades aren't going to work. Remember, probability is between 55 and 70%. All right, I'll get long there, and I'm going to set my stop, my first protective stop, right there. Of course, I'm driving manually, so the stop and the take profit limit doesn't have to go that far for me to hit out. Just trading price action. See if we can get a bit of a push higher. Take out some of those wicks back there. All right, we'll take 8 points. Scalp number 2 of the day. We are up about 1,600 so far. Let's keep moving. Actually, to be precise, we're up 1,582. Let's keep it rocking. Okay, we have 40 seconds left here on this 2-minute bar. By the way, if we get another close above this wick here, which is about 90, 22,990. Then I gotta look to buy this for a test of 23. So I will, again, if you're gonna scalp moves like this, you gotta be willing to re-enter. Gotta be. Can't be scared to re-enter. All right, let's see here how we close. Ooh, that's a big jump. That's a big jump. I gotta hold off. I'd say too slow, but that was just really fast. I didn't even really have a shot. That opened and jumped magnet right 4 points to 23,000. So I can't hit that. You know, even if I traded that with a stop entry, I wouldn't have been able to place it quick enough. It just would have immediately given me an error because that popped right through. That was very, very fast. It's all right. On to the next. Okay, well, there is, by the way, a new high. Just barely a new intraday high there. High currently is where my cursor is. I'm sorry, high previously is where my cursor's at, 23,750. So now we're pushing into newer highs. 55 seconds left here on this 2-minute bar. If we close at the high of day, even given the context of the market we're in, there would be room before any kind of ascending resistance point, which is very aggressive right now. So if we close at high of day, or very close to it, really above the previous high of day, so basically above 23,008 in the next 30 seconds, then I would have to buy the rollover. But here you see the bear stepping in, trying to shoot that baby down. So let's get the position window ready to go, and I am ready. Oops. Hang on. Okay, and I am ready to hit it if we get a close, which doesn't look like we're going to, does it? Above 23.8-ish. Yeah, not there. Got to hold off. Next bar. Joe, had we gotten that, that would have been a rollover buy for me, with a scalp mentality, not a swing mentality, because the breakout likely would not go very far, right? But we did not get the close above the previous high of day, so I gotta hold off. Big shrinking bull body, gotta hold off. And you can see here those bulls. I'm sorry, the bear is stepping back in here after wicking that down. Let's see if they can. I mean, I'm a little hesitant to short the first bear bar, even if it closes beneath this. But, one certainly could. That would not be a bad trade. I would not yell at you for taking that if you did. Well, you got to understand that you have a little bit less confirmation, right? So probability is a little bit lower. Reward to risk could be quite a bit higher. No, you're good, Joe, man. Hey, very valid question. With a move that strong, though, when you guys see me, short a strong bull close or buy a strong bear close, it's usually within a reasonably tight trading range. Usually it's maybe a 50-point or less trading range, not always, but often. Here, this is just a really strong bull push, so I'm not really a big fan of stepping in front of that. Unless we get confirmation, which the bears are currently trying to put together. Now, it depends on the size here of this bear bar. The bigger it is, up to a point, the more willing I would be to take it on the first bar. But for big reversions like this, after a big, strong bull push, I prefer to wait for a second bar, because a lot of times what happens, lately especially, is we get a tight push like this. And then even if you get one bear bar closing near the low, it turns into a sideways trading range before it makes a decision, which it might be trying to do right now. So I don't want to get short at the bottom of what is likely to be a sideways trading range, right? All right. 10 seconds. Let's see if we can get a close. At least kind of well beneath there. It doesn't have to be, 10 points, but... Yeah, see that close? Right at the previous wick low? I can't short that, man, because this could very easily just, again, sideways trading range until we make a decision. Now I need more information, so let's wait to see what this bar does. If we do see a nice strong bear close out of this bar, then I definitely have to short the rollover. All right, Taz, hope you had a good day, brother. Have a good one. You see this, man. Bull's trying to take it back up into the range. All right, let's see here. I want this bear bar to grow a little bit more. A little more. We have 5 seconds. Let's see if the bulls take it lower here and close. Ooh, it's kind of a shrinking bear body. Let's see. I'll give it 10 more seconds. See if we get a bit of a pullback here. Yeah, it's going to go without me, I think. That's okay. That was a little tight for my liking anyway. Had we gotten a bit of a pullback here, back up toward this wick, inside of the body here, I would have given it a shot and shorted that. That's all right. Let's move on. Next bar. Minute 30 out. 5-minute 20 EMA is at 962-ish. I'm sorry, like 962 on the 5-minute. So it's obviously not this one. That would be this one that I'm watching here. That kind of lilac colored line. The more we test it, though, of course, intraday, the less meaningful it becomes to me. But let's see if we can get a strong bear close here out of this 2-minute. Again, this is the 5 minute. We got 40 seconds left on the 2 minute chart. Obviously over 3 minutes here on the 5. I'm okay with that 20 EMA there on the 5. But here on the 2 minute, I need to see a strong close out of the bears. Meaning kind of down in this region for me to short it. So let's see here. 15 seconds. I will get ready in case they decide to do something. Yeah, big wick. Gotta hold off. Next bar. Joe, on the 2 minute chart, do you want to close under that 966 wick push up earlier? Here? I'm not really looking at that. This here in my head kind of gets wiped clean with this move. I kind of think of like moves like this as kind of more or less an eraser to previous levels if this move ignored it. I think that's what you're talking about. All right, let's see here. Okay, so got 18 seconds. Let's pop this up and see if there's a trade for us. 10 seconds out. Now again, the 20 EMA on the 5 minute is kind of like 10 points away, but I'm cool. 8 points away, but I'm cool with it. Give this 15 seconds for an entry. And I'll short that, and I will risk previous bar's wick high as my protective stop. Of course, risk doesn't necessarily have to be that. We will drive manually based on price action here. And we'll just see if the bulls can make that work for me. Push it lower. I'm sorry, if the bears can make that work for me. Got fingers on the hotkeys, drive in manually. This is the third trade of the day so far. Currently, we're 2 for 2 thus far. Bull's trying to bounce this back, man. Kind of a decent sized wick off the 5 minute chart. Just got the rollover on the 5. All right, somewhat of an inside close here. So we're going to leave it. See if the bears can take control here. ATR currently about 15. It's holding on. It's actually a little up since we got on stream. It was about 14 when we got on, so it's good to see that holding on. Typically with ATR, it tends to, like this kind of time of day, it tends to kind of find a bottom and not really go beneath that, at least lately. All right, Bears, come on now. Give me a bit of a fall through. Bulls trying to take control here again. Let's see how they close this bar. All right, let's see if the Bears can kind of fall through that recent wick low in the last 5-ish minutes. Because that wick low is also the 20 EMA on the 5. That has not seen a lot of respect today, honestly. We've really respected it well once out of like maybe 6 or 7 tests. And the only reason I give a shit at all is because it's a self-fulfilling prophecy, so... This is a 2-minute chart, by the way, not the 5-minute, so this is not the line we're looking at, but that low right here is the 20 EMA on the 5, so I'm keeping an eye on that. All right, we got a minute 35 left here on this bar. Bull's trying to step in, baby. What a hell of a bull bar. Let's see if they can take us out. All right, we'll cut that there and move on. Joseph, what's up, brother? How you doing? Okay, we got a minute and 3 seconds left here on this 2-minute bar. Let's see how the Bulls close this up. "30 seconds out. Alright, well, I gotta get ready in case we see a reasonable close here out of the Bulls. Right now, that wick's a little sizable. A bit of a push. I'll buy that and get long. And of course, I will put my protective stop order just below the curl. Keeping things tight. Yeah, I'll put that size. There we go. Okay, let's see if we can get a little scalp here. Again, driving manually here. Depends on the closes of the bars here. See if this turns into a little sideways trading range. I'm back to doji territory here on the 5. We got 60 seconds left here. Oh, that's ugly. That is very ugly. From early management, for me, I prefer to wait for bar closes, as you guys know, at least on early stops. But my protective order is there just in case. If this takes out this wick low here, then all of a sudden I start thinking, all right, are we just looking at a sideways range here? Because if you keep doing the same thing here, trying to bet on this being the range, like really, you see that? Yeah, like this being the range, then you can just get burned back to back to back to back to back. You gotta try to recognize it within 2 or 3 trades if you can. Well, let's see if the bears can actually pull that off. Ten seconds left here on this 2-minute bar. Yeah, let's see if we get, yeah. Let's see if, yeah, the bears are going to give us an inside close. I imagine they at least want to test a breakthrough here. But I gotta tell you, with this being a range market on intraday and on the daily, if they test this, I want to be stopped out. But hey, I can't be betting that that's going to go very far. Just because the context of the market right now, right? So probability is here that we're going to get stopped, go flat, and then we'll readjust. What are these bears doing? That got within 1 tick. There we go. All right, we're flat. Okay, now these weak little breakouts, I just don't buy it. I think we're probably gonna end up seeing this just turn into a sideways, whether it's descending little trading range, flat trading range. Started the day 2 for 2. That was our 4th trade, and that was our 2nd loser now in a row. So we're now 2 for 4 on the day. And we got burned betting on the Bears doing what they said they were going to do and betting on the Bulls doing what they said they were going to do. So at this point, with new information, I'm just not interested really in taking the Bears at their word, taking the Bulls at their word. I mean, I think this move being as tight as it was and then kind of fading, turning into a bit of a trading range, it's pretty representative. You see this inside close. Kind of indecisive here. So I am more now leaning toward just straight up channel scalping if we can get a setup. So let's see here, because I imagine this likely turns into some kind of at least descending trading range, at least for the short or the near-term future. Which means in all reality, if we get like a strong, moderately strong bull bar closing near the high of this range, I'd be more inclined to short it than buy it. So let's do that and see what we can do. Okay, so right now, and this is a 2-minute chart. Right now, I mean, if we look at this and say, okay, well, what's everyone probably looking at? Don't overthink the lines. Just draw them the average of what 100,000 people would draw it. I think realistically, everyone's probably kind of looking at this. Breakout's not likely to go very far. Of course, they could, but we're maybe talking a 15% probability of going very far. Breakouts, you could argue, yeah, bull flag. Breakout's not entirely likely to go very far unless they start really, really getting strong closes above previous wick highs, right? So I'm going to delete these just because I don't want people to get the idea that, you know, I'm just straight up trading off of a trend line, because that's not the idea here. The idea is more to trade the price action and bet against when bulls get all cocky, bet against when bears get all cocky within reason. Right, unless there's like some news event that causes some crazy move. That's the idea here now, so let's see if we can get something. All right, we got a minute 10 seconds left here on this 2-minute bar. You know, by the way, Take Profit Trader is still running their 4th of July deal. 40% off, no activation fee with code BIG. They offer daily payouts. I think it's probably best to start with that. If your goal, I assume a lot of your guys' goal, I'm actually very curious, is this the correct assumption? Are most of you guys trying to take this full time? I guess that's my assumption, but maybe that's not entirely the case. If you're trying to take this full time, I think Take Profit is probably the best place to start because they allow daily payouts. If you're trying to scale it big, which means you're already paying your bills and it's time to just make more, then Apex is where you go hard and scale to 10, 15, 20 accounts and scale the numbers bigger. Takes longer to get your money, but you can make more with 20 accounts, I mean, realistically, than you can with 5. So right now, I'm looking to bet against little breakout attempts. I want one side to get a little too cocky, give us a nice clean close in their direction, and then I want to bet against it. Do the opposite of what I would do in a trend market. Yeah, that's an inside close. Can't do anything on that bar. On to the next. We are 2 minutes out. I'll tell you what, whenever I go away for 2 minutes, this thing seems to break. So, I'll be back in 2 minutes. Let's see if it works. right. Well, it kind of worked, didn't it? We broke out a little bit there. At least attempted to. So, let's see here. Now, again, I'm interested in betting against breakouts with or without confirmation, depending on the setup. So in this case, if this red bar, this bear bar, if we can see a half decent close, let me think about this. Near the low of this bar, but not growing too much further. I'm not really interested in being right in the middle of the range. Then I got to consider getting short. Just for a little scalp toward the bottom third of the range. But we got a minute and 10 seconds to make that decision. All right, stay put. Oh, son of a bitch. All right, bear's growing that bar a little too much for continuation scalp to the bottom third of the range. They're taking all my profit potential away from me. So, 20 seconds. Let's see how this bar closes. Yeah, there you go, Joe. You bet against the breakout, right? There you go. You got paid because of context. Good work. All right, on to this next bar here. That was a decent close out of the bears, but we're not quite in the bottom. I'd say we're not quite in the bottom third of this little channel yet. Yeah, I mean, hey, listen, Joe, you know, you just gotta do what makes sense to you. You might take a trade that I don't take. I might take a trade that you're like, I don't like that trade. Totally cool. Totally cool. There's a lot of ways to execute your edge. It's just about trying to maintain that edge as consistently as you can on as the highest percentage of your trades that you can, which you're never really gonna know, but you'll know in hindsight whether or not, you know, you made money that month or not, if the sample size was high enough. And then your job is to do that. Get the sample size as big as you possibly can for the style of trading you're doing. Scalpers are going to have a bigger sample size of trades. Swing traders, a little bit less, but they have more edge. All right, let's see here. I want to see if this closes above this wick. I'm sorry, the previous bar is high. Yeah, no, see that it closes inside. All right, next bar here. Let's see how this next one closes. A minute 55 out. Yeah, Eric, you know, so Eric here says he's up 1,000 across 5 accounts, but not proud of his trades. A lot of averaging into losers, but in my mind, sometimes averaging into trades I consider winners that are just going against me is okay-ish. You know, listen, Eric, averaging, especially as a scalper, if you're averaging into your trades, that's okay in a range market as long as you have like a, okay, I need to cut it right now point. And if you start the trade trading small enough, if you start it trading too big, now what is too big? 1 mini is already too big. Okay, but if you take the trade, if you enter with like 1 or 2 or 3 micros, depending on the account size, and you're scalping, and it's a range market on the daily chart, bottom of your screen, and it's a range market on your execution time frame, 2-minute chart. If you want to average in, make a few rules on when you do, when you don't, when you take profit, on the first, on the second entry, on the third entry, When you cut it all, that's fine. But when a trend market hits, averaging into losers is a bad idea. Because you might have caught the wrong side of the trend. But in a range market, breaking out into a trend at any moment is relatively improbable. That's all we're doing here is playing the probabilities. There's no, there's just doing what contextually makes sense. And averaging in can make sense in a range market if you have the emotional stability to handle it, if it doesn't go your way. And if you have some loose rules around doing so. And if you stop doing it in a trend market, otherwise you are going to burn yourself if you don't recognize the trend early enough. All right, another bit of an inside close here. Relatively big wick back out of the bears compared to the full size of the bar. So on to the next bar here. We are 1:50 out. That's the nice thing about the 2-minute is if there's no trade, it's like you're never too far away from another look. It keeps you engaged. What's up, G-Boss? How we doing? Yeah, I mean, listen, I think a lot of people, they like to paint with a really broad brush. Trading is really, really nuanced. It's very complicated. I mean, it's simple. You have to do what makes sense based on the market environment. But there's a lot of ways to have an edge. There's a lot of ways to blow out your edge as well. But a lot of people like to say, oh, you average into scalps? You should never do that. Why? Why? Show me data as to why this never ever works. Just because you did it and blew your account doesn't mean that I, completely ignore market context like you did. A lot of ways to do this, man. Just because something is done that blows a lot of people up doesn't necessarily mean it's just so wrong. The data always wins. The emotional giving of information based on personal experience when your personal experience was just a lack of responsibility and doing the thing is useless. So when someone says, I don't care if it's a range market, you should never scale in because you're gonna blow up. It's like, well, okay, but you scaled in because you scaled in short on the biggest bull trend market of the year. Like, no shit, you blew up. And then you never had an exit plan of when to get out, and you just kept scaling in. It's like, yeah, duh. But, I'm not going to pretend like it's not. It is hard to scale in, to be a scale in, scale out scalper, even in a range market. It's hard, and it can be emotionally exhausting. But I'm always going to tell you guys, like, the reality of this. You can do that, and it can be done. And guess what it does? It increases probability of your trades. Let's not pretend like it doesn't, especially in a range market. It increases probability. But if you get caught in a big position and a news bar hits and you don't have a plan and you have no raw stop order sitting out on the market, you could get blown up very fast. Gotta be careful. A lot of new people here today. Appreciate you guys hanging out. If you have not done so already, I'm live every single day scalping. I'd appreciate seeing you subscribe to the channel and become a regular here in the chat. We've got regulars here every day. Hopefully you're one of them. All right, we got 23 seconds until the rollover here of this 2-minute bar. This to me looks like a slightly ascending bull channel, overarching kind of flat bottom descending resistance. Let's see how this closes in the next 10 seconds here. Looks like it's going to be an inside close. I'm really looking at this wick low where my cursor is at. Yeah, it's going to be an inside close, so we'll give it one more bar. Well, appreciate having you hit the chat, Dub. Good to have you, Pat. Joe. Welcome, Joe. Everyone say welcome to Joe. First day here. Okay, we got a minute and 3 out from the close here, this 2-minute bar. Again, I'm watching those kind of the wick lows of the previous 3 bars. Let's see. Okay, ATR here is now down at 14. This is the lowest it's been since I went live here this morning. I think, yeah, I mean, it's kind of equal. The lowest we've seen is low 14s. That's where we're at currently. 13.5 now. And by the way, I know, again, a lot of you guys are new here. When I say ATR, what I'm looking at here is this blue line here. ATR, it's not an indicator really. It's just the average true range. Think of it just the average range of a 2-minute bar, and that's based on the last 10 bars. Okay, so in this case, on a 2-minute chart, that's the last 20 minutes. And then each individual kind of orange vertical bar is just the range of that bar. Okay, so it kind of lets us overlay and see what's happening to volatility over that 20 minutes. Is it falling? Is there an outlier that's propping up the average? We need to consider that. Is it increasing maybe? Did we just get news and the range is 5x what the average is? Also helps us set reasonable price targets to kind of keep it a scalp, since that's what we're looking to do here. 50 seconds left here on this 2-minute bar, man. Let's see where we close. Hmm, 17 seconds. Bear is wicking this way back into this tight little range we've been seeing for about 20 minutes now. Try to avoid taking trades in this, guys. And I don't say that if there was money to be made. It's just, I've tried over the years like this little stuff. You know, if we get a push higher, a pullback, all of a sudden maybe there's a trade. But like, just right here saying I'm gonna get long, I'm gonna get short, like right in the middle here at like 91 or 92. Very little edge, if any, there. I think it's just, your data will look a lot better if you just cut out this sideways stuff. Now again, someone could argue, well, this whole last hour is sideways. Yeah, but there's a lot of opportunity in here in hindsight, right? We took some trades. Couple of winners, couple of losers so far here today. But I'm talking about like this level here, 91, 92, really tough to find an edge. I would just encourage you to kind of wait that out. Let the algorithms do their thing. Their edge is a little more set in stone because they have millions, minimum hundreds of thousands, if not millions of a trade sample size. So they understand their edge very well. We don't really have that luxury as retail traders because our sample size is always going to be a little bit smaller than theirs because they're taking so many trades a day. All right, let's see here. We've got 15 seconds. See if we can get a bit of a stronger bear close that I can bet against. Range market, right? Let's see if we get that. I need to see it close at least below 980 here. We're not going to get it. On to the next. This little garbage is really, really tough. I mean, realistically, we're looking at kind of 12 points wide. It's really tough. It's really, really tough. Because even if you are like, I'm going to scalp for maybe half this little sideways range. You guys know how I feel about flat tops, flat bottoms. The probability of break is a little higher. And I've been saying this for as long as I've been, going live here. We've seen this a million times. When you have a flat top and a flat bottom, rather than like an ascending, or let's say a descending resistance and a flat bottom, for example. This scenario is very much a coin flip. It's really, really tough. But if you're like, yeah, but I'm not really going directional. I'm just betting on breakouts. Okay, that's reasonable. I wouldn't yell at you for doing that. But something I'd want you to think about is, how do you manage risk kind of effectively? I mean, you could risk the size of one 2-minute bar. I guess you could say, I'm going to risk, 10 to 15 points and look to make maybe half the range. So 6 to 8 points, maybe. You could do that, but it's tough. It's tough because you might just end up getting chopped out on attempts and then reversions, attempts and then reversions. So me, with this kind of thing, when it's this tight, I prefer to just kind of see more of an outskirt push, where it kind of takes a little risk off the table. But I'm going to clean up this chart. We know that that's there. Okay. Minute 13 here left on the 2. It's like a bit of a doji here. I'll tell you what, I'll be back in 1 minute, 1 sec. Real quick, don't go anywhere. right, we are back. No, Javaz, take profit trader is CPI is a really big release, so no. CPI is basically always on the do not trade list for take profit. All right, now again, me, hey, I'm really looking for this kind of thing. I'm trying to bet against these breakouts right now. So, relatively strong bear bar closing near the low, I'm not selling, I'd be buying that. Reasonably strong bull bar closing near the high, I'm not buying, I'd be selling that. Just looking to bet against these little breakouts. All right, 30 seconds out here from the rollover of this 2-minute bar, man. Let's see if we get something. What's ATR at now? Yeah, we're down below 13. This is the lowest ATR has been pretty much all day. I mean, it's fine. We can make it work, but just be aware that volatility's slow in here. Yeah, Joe, you know, 23K has definitely been a bit of an annoying level. I'm not gonna lie, for me, it's just... 23 has been so annoying. I mean, look at this. Look at this. It's been fine. We've been trading the range. It's not really that big of a deal, but I hate when this kind of shit happens. We had this maybe a month or two ago. Maybe more like two and a half months ago. I can't remember. There was one level that just would not give it up. And every day it was back to it. I forget what the level was. I have a very short trading memory, which is a good thing. Yeah, Tom, it might have been back at 20K, I forget, but it's just a pain, man. I mean, 23,000, it's not like an S tier level, but it is a tier 1 level. So, you know, we got to keep an eye on it, but when we just get sucked back to it every time we try to deviate, it just kills volatility. I'm not really upset about the level, it's more just the volatility. We want things to move, right? I don't care which direction, just move it. All right, let's see how this baby closes. 30 seconds. Now again, this feels unnatural for a lot of traders. But for me, if this stays reasonable, rather than like dumping off to here, if we close near the low of this, I have to buy it. Because it's a range market. So let's see here, 8 seconds, see what we get. Pop up the open P&L for you. Gotta buy that rollover. Limit order out, no fill. Leave that out for a little while. Let's see if we can get a fill. Give it 12 more seconds. I don't like to go over 30 seconds into the bar if I can help it. There we go. We barely got a fill. And my protective stop order will be the obvious curl. And we'll leave that up there and just look for a scalp. A little reversion scalp, see if we can get a little something. Risk is tight, man. Now again, buying a strong bear close like that in a trend market, that 100% would be a sell setup for me. But in a range market like this, I got to be willing to bet against little breakouts. And if the breakout comes, man, I'm cool with it. But I got to be betting against them. Most of them just don't go very far. It's just the probability right now. There we go, a little bit of a push. Yeah, I'll pull that guy off, see if we can get a fill at about 9.25 points. Leave my limit order there at 84 for a little bit and see if we can get a push and a fill. There we go. We're out there. All right, decent little scalp. Let's move on. Oops. Okay, so again, still just watching the range. Chris left without me. Yeah, man. Hey, you know, I prefer to enter on a setup like that. I need to enter with a limit order. Luckily, I got a pullback and a fill just before that 30-second mark, which for me, on a good quality setup, I give it 30 seconds to get a fill when I'm limit order scalping, or I guess stop entry scalping as well. On a okay quality setup, maybe like a B or C quality setup, that still maybe has a little edge, at least in my opinion, I believe it to be true. Of course, you're never going to know for sure if you have edge, but you know more and more certainly when you see the same thing over and over again, the more data you get, right? But I will give a B or a C setup about 15 seconds. More like a B plus, A minus, A setup, I'll give like 30 seconds to get a fill. We just barely got a fill before the 30-second mark. I was about to cut it. Pull the limit order for the entry, that is. But got a fill there. Now on to the next, right? See what else we can get. Again, hey, I got to bet against breakouts. I know it feels unnatural to buy a strong bear close like this, but right now, again, probability says, you know, these breakout attempts, this little breakout attempt, it's just not bound to go very far, at least not extremely fast. Unless we're getting news or something, in which case I wouldn't have entered because this bar would have been 3 times the size. Following from Brazil, good to have you. Hey, Omar, good to have you. Hey, is it possible to scalp a couple of points using your strategy? You know, in my experience, here's how I think about this. My kind of minimum is, let's talk about, you know, NQ, MNQ for a second. My kind of minimum is, I like to scalp for at least half the size of an average bar. So if I'm scalping the 2-minute, right now ATR, which is the average range of a bar, based on the last 20 minutes, right, the last 10 2-minute bars, is 12 or 13 points. So the minimum that I would be scalping for right now is maybe 6, 6.5, 7 points. However, If you guys remember on the 4th of July, the market was kind of weird. We were just having fun. We actually made some money on the 4th of July, but the range was like 5 or 6 points. So we were scalping for 2.5, 3 points. However, mentally, my ideal minimum is more like 8 points, but in low volatility, like 8 to 10 points, right? In low volatility environments though, man, you know, sometimes you just have to scalp for half the size of an average bar. So if volatility is 7, if the average range of a bar is 7 points, but you're like, dude, I have edge in this market. My risk is managed for anything black swan related. I have edge here. The price action is just smooth. I feel like I'm in the driver's seat. Yeah, you can scalp for 3, 3.5, 4 points. I know it sounds nuts, but like your risk on it is going to be what? Even if you're leaning heavily into negative reward to risk, your risk is going to be no more than 10 points realistically. So it's really not that big of a deal, but mentally, to answer your question, my kind of mental minimum is like I prefer 8 to 10 points, but in low volatility environments, like kind of like right now, you know, maybe it'll go down to half the size of an average bar, to answer your question. In higher volatility environments, if the average size of a 2-minute bar is 40 points, you know, all of a sudden my minimum is more like 10, 15, 20 points. Just got to adjust for the volatility when you're scalping. Joe, I think you were talking about that last trade. You said no wick, and I'll take it. Is that a need enough points to make the math work? I'm asking because I would think a wick is a good sign. It's so tight, I guess a wick would eat profits. Yes, Joe, so you're asking, had this wick backed up? Because, again, for those of you guys, if you're just joining the stream, the last scalp that I took, this is a 2-minute chart that you're looking at right now, so it's just a few minutes ago. I actually bought this strong bear bar closing at the low. I bought it as it closed and opened into the new one. Or I put a limit order out and then it pulled back and filled me. Joe's asking it, had this wicked higher, you know, you would think since I'm looking to get long, you'd think that would be a good thing. Well, Joe, for me, the answer is since I'm right now range mentality, buy low, sell high, buy back lower mentality. I want to see the bears get cocky. I want to see this pressing as hard as possible toward the outskirt of the range because that just gives me lower risk, similar probability in my opinion, since it's such an aggressive range market, and higher potential reward. Even though I might still be leaning into negative reward to risk, I still want to make that math look a little nicer. And I don't care if the bears are cocky because I don't believe it's going to go very far. Unless, of course, again, it's 3 times the size and we clearly, like Trump just said something that I missed. Right, but that wasn't the case. So I wanted to see a nice, clean, strong bear bar closing near the low. In a trend market, this would be a rollover sell for me to get short. But it's a range market. The bears are all cocky. They're feeling good. And I'm going to say, I don't buy it. And I buy it for a scalp back into the range. To answer your question. Well, let's see how this bar closes here. Volatility. Yeah, ATR is at about 12.5. 10 seconds out till the close of this 2-minute bar. I'm kind of looking at the wick high of this signal bar that we took on the last scalp. It's going to be an inside close there. All right, guys. Well, listen, I'll tell you what. It's time for me to hit lunch. Take Profit Trader is still running their 4th of July sale, by the way. It's 40%. This is the best deal they've ever run, at least that I've ever seen. 40% off, no activation fee. The no activation fee alone wipes $130. Okay, so when you pass, you pay nothing. And you get 40% off the top when you first buy the test account if you use code BIG, B-I-G. Okay, it's also best deal always at Take Profit, no matter when you use it, and Apex. Apex right now, if you're looking to scale, you're like, okay, it's time to just take this huge, I need 10, 15, 20 accounts. Apex is probably the best choice. That is 80% off, and you can pass them in 1 day. So opportunity cost is not that big of a deal. You can spend an afternoon passing some evals at Apex, and you're funded the next trading day. So, all right, guys, I'll tell you what. Regularly scheduled programming this coming week. I will see you bright and early Monday morning. All right, guys, if you have not already, I know there's a lot of new people here. Hope to see you become a regular in the chat. We love it. And subscribe to the channel, and I'll see you guys Monday morning. All right, guys, hey, this afternoon, if you're still scalping, I'm going to come back and scalp the afternoon. Be patient, but when the opportunity presents itself, you cannot be scared. It's a lot of this until it's not. If there's 4 trades back to back to back, you got to put them on. Patient until it's time to not be, then fucking hit it hard. All right, guys, see you Monday. Have a great weekend.